Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. Okay, if you are looking to take your Forex trading to the next level, then you have come to the right place. In this video, we are going to dive deep into how to build a powerful weekly Forex strategy that can help you stay on top of the markets and trade more effectively. Whether you are a beginner or someone who's been trading for a while, this strategy will give you the structure and confidence to approach the market with clarity. So before we get started, make sure you hit the like button, subscribe to the channel, and click the bell icon so you never miss out on any of our latest trading tips and strategies. All right, let us jump right into it. First things first, what exactly is a weekly Forex strategy? In simple terms, it's a systematic approach to planning your trades for the upcoming week. All right, rather than jumping into the market and reacting impulsively to every price movement, you are taking the time to map out your plan, identify high probability setups, and execute your trades with purpose. Okay, so now a weekly strategy helps you stay focused, avoid overtrading, and most importantly, keep your risk management in check. Without a strategy, trading becomes a guessing game, right? But with a solid plan, you can approach the market with confidence. So why is it important to have a weekly strategy instead of just trading on a daily or intraday basis? It gives you more time to analyze the broader market trends and make well thought out decisions. Okay, when you are trading on a weekly basis, you are less likely to be caught up in short-term market noise and more focused on long-term opportunities. All right, so the first step in building your weekly Forex strategy is to set up a trading plan. All right, this plan should include your time frame selection, key currency pairs, and identifying the market trend. So first of all, in terms of time frame selection, as you can see, I'm currently on the daily chart on the Euro USD pair, right? The time frame you use for analysis is crucial. For a weekly strategy, you would want to focus on longer time frames, like the 4-hour or the daily charts. Okay, these charts will keep you, will help you capture the overall market trend. For example, in this condition, we can see that we have a clear sell trend on the daily chart, and we can confidently say that this is a sell trend. If you go to smaller time frames, you might see a lot of noise, right? A lot of noise. At intervals, you can see trend changes in trend direction. But on the daily time frame, you can see clear trend directions, okay? Like how we identified here as a very clear sell trend, okay? Now, in terms of key currency pairs, you can't trade every currency pair, so you need to narrow down your focus. I recommend picking a handful of pairs that you're comfortable with and have enough liquidity. For instance, the Euro USD, which I am currently on. Another currency pair can be GBP USD and USD JPY. They are some of the most traded pairs, okay? And they provide plenty of opportunities for both beginners and experienced traders. Stick with the pairs that you understand best, all right? Now, the next thing for you to do is to identify the market trend. At the start of the week, take time to access the market trends. Okay, so let's go to the properties and let's set period separators. Let's allow period separators to show. Okay, so I'm just going to go to this. We have 11th November. Okay, so we have 28 November. Okay, let's use this. We have 27th November to, okay, no, I am looking for a week. 25th November to, is this 25th? 20, this is 18th November to 25th November. Okay, so this is a duration of 1 week. All right, that's what I came to check. So each of these separators indicates 1 week. So this is price activity within a week, price activity within a week, like that. Okay, so At the start of the week, so when the week is just starting, take time to assess the market trends. Are we in an uptrend or are we in a downtrend? For example, at the start of this week, we should have analyzed the ongoing trends, in the previous weeks, right? So we can see that here we had a sell trend, we had a breakout, and then we had a resumption of a sell, right? So this is showing that there is actually bearish pressure in the market. There is bearish pressure. And then looking from a wider view, you can see that the price is still creating lower highs and lower lows. As you can see, even from a wider view, it's still creating lower highs and lower lows. So this is generally still a sell trend. That's at the start of the new week, right? So after you have assessed the market, you have assessed the market trends, then you have to now identify good opportunities. Okay, the step of identifying market trend is vital because the market trend will dictate your trading strategy for the week. If we are in an uptrend, you might focus on buying opportunities. If the market is in a downtrend, selling might be more appropriate. Now let's talk about the two core forms of analysis that you will use for your weekly strategy, which are technical analysis and fundamental analysis. Okay, with technical analysis, you are looking at charts as we are doing here, right? Price patterns, candlesticks patterns, indicators, support and resistance zones, all of those, right? Those are what make up your technical analysis, right? So for your weekly strategy, you want to zoom out and look at broader price action, right? So even while zooming out, we are still seeing that the trend is clearly a sell trend, right? If we go back to the daily time frame, we are going to see this is an actual sell trend. So unless if we then have a breakout, right, in the upward direction, and one of the indicators you can actually use for trend following strategies is the moving average. Okay, so this is the 200 EMA, and we can see that 200 EMA is indicating a sell as price is trading below it. And we can also add the 50 EMA to it, just for the crossover strategy, right? So we can see that the crossover had happened here already. We had the crossover happen here already. So this was a clear sell trend. Up till now, it's still a sell trend. Okay. So having identified that, make sure that you also identify your key support and resistance zones, okay, on your daily chart, right? So these levels, as you can see how I identified a couple of them. These levels represent areas where price tends to reverse or consolidate. So when price approaches these zones, you can plan your entries or exits. Okay. While price action is king, you can use indicators to confirm trends. For example, the moving averages, like the 50 and the 200 EMA that I already added to the chart. They can help you to gauge the long-term direction of a currency pair. Additionally, you can decide to add the relative strength index. All right. The RSI is great for spotting overbought and oversold conditions, okay, which can signal potential reversals. Now, secondly, you need to have understanding of fundamental analysis. Fundamental analysis is equally important for your weekly strategy. This involves understanding the economic data and events that could impact the Forex market, such as interest rate decisions from central banks, economic reports like GDP, inflation, and employment numbers, and also geopolitical events like elections or trade negotiations. So you should look at the economic calendar for the week ahead and highlight key events that could move the market. For instance, if there's an upcoming interest rate announcement from the Federal Reserve, this could cause volatility in the USD pairs. By understanding the fundamentals, you can better anticipate major market moves. Okay? Now, one of the most critical parts of your weekly strategy is risk management. No matter how strong your strategy is, there will always be losing trades, and that's why you need to protect your capital. So first of all, before entering any trade, always define where your stop loss will be. All right? A stop loss is a predetermined level at which you exit the trade if the market moves against you. This helps to minimize your losses and prevent emotions from driving your decisions. For example, if we had confirmed this sell move, we had already gotten a confirmation, and you can see we had a bearish crossover from the 50 EMA and 200 EMA. Would have considered entering a sell, perhaps around here. Setting stop loss above the nearest swing high is a great place. And for a take profit, you can consider support levels. So it's important to always pay attention to stop loss and take profit levels. Secondly, your position sizing is another important aspect of risk management. Calculate your trade size based on the amount of capital you are willing to risk per trade. A good rule of thumb is to risk no more than 1 to 2% of your total account balance on a single trade. Okay? And then finally, aim for a risk to reward ratio of at least 1 to 2. This means for every dollar you risk, you are making minimum of $2. All right? This ensures that even if you have a few losing trades, your overall profitability is not affected. Now, the Forex market is constantly changing, so it's important to review your strategy at the end of each week. This will allow you to identify what worked well and what didn't. So you can ask yourself whether you followed your plan, or did you let emotions take over? And then ask yourself what trades were profitable and which ones were not. And also ask yourself whether there were any key events that you missed or didn't anticipate. Okay, by reviewing your performance, you can refine your strategy and make adjustments for the following week. All right, so building a solid weekly Forex strategy is all about preparation, right? Preparation, analysis, and discipline. By taking the time to plan your trades for the week ahead, you'll be able to trade with confidence and avoid impulsive decisions that can lead to unnecessary losses. Remember, success in Forex trading doesn't come overnight. It's a process of learning, adjusting, and improving. So if you found this video helpful, make sure to give it a thumbs up, subscribe to the channel, and leave a comment below with your thoughts or any questions you might have. I'd love to hear how you are applying these strategies in your own trading. Thanks for watching, and I'll see you in the next video.